Hello guys, welcome to our course series Public Economics, and this is Unit 5 Externalities and Solutions. So next is the internalization of externalities. So what it means by internalization of externalities is that in some way we can adjust the price or cost in such a way that it includes the external cost it associates. So in negative externality and taxation case, Arthur Pigou suggested imposition of tax, which is known as the corrective tax or Pigovian tax. It is also called sin tax when the commodity involved is intoxicant like alcohol or smoking. So if T tax is imposed which is exactly equal to marginal external cost, so in that case private marginal benefit will be equal to marginal social benefit, and which is equal to marginal social cost, and the total cost will be marginal private cost plus tax. So we will understand this through this graph. If MEC is the marginal external cost and which is equal to MEC equal to T, then we have increased the cost for the production side with the T amount of tax. In that case, the supply curve will shift from marginal private cost to marginal social cost, and on this marginal social cost the equilibrium quantity will shift from QM to Qs, which is exactly what we wanted to reduce the quantity. And through this tax government will get revenue, which is known as the polluter's pay. So it will help the government in many ways. Like first, it will achieve the marginal social benefit is equal to marginal social cost. There will be transfer of income from the polluting producers or consumers to those who are getting affected. So it may be in the terms of increased government services, or the government can spend that revenue to clean air or whatever, the reduce the effect of externalities. And it will help because the quantity is decreasing, so it will reduce the disposal of waste in stream and thus the reduction in pollution. But because the quantity is only reducing, it is not becoming zero, so it will not eliminate the problem, but it will reduce the problem. So next is the negative externality and property rights. This is another way, apart from Pigovian tax, this is another way to deal with negative externality, and this was suggested by Ronald Coase, and he got the Nobel Prize in 1991. So what he says that the government should clearly assign property rights and reduce transaction cost. So two terms are important here. One is clear property rights and second one is the transaction cost. So he says the efficiency is irrespective who is assigned the rights, so long as the transaction cost involved in bargain between the parties is zero. It doesn't matter to whom we are assigning the rights. The only thing that matters is the transaction cost should be zero or near zero. So transaction cost includes every other cost other than production cost and transportation cost. It also means the one party putting efforts to bargain from the other party in search of the other party and to complete the deal with the other party. So suppose for an example, there is a railway company who is using spark emitting engines. There are the farmers whose crop is near the railway line, railway track. So there is a risk with this spark emitting engines. It may cause fire in the crops of the farmers. So in that case, we can't stop the railway and we can't say farmers to burn all their crops. So what the government can do, so government assign rights to continue use of spark emitting engines on railway line. So suppose in first case, the government assigns right to the railway company. So what the farmers will do, farmers will go to railway company and purchase some of the rights from the railway company. So with lesser amounts of rights, railway company will reduce its trips on the railway line, and this will reduce the probability of catching up the fire in the crops of the farmers. So it will result in an efficient amount of trips the railway company should make. In other case, if the government assigns rights to the farmers, then the railway company will go to the farmers and try to purchase some of the rights from the farmers so that he can continue some trips on the railway line. In that case, farmers will decide how much money is it worth to risk their crops. So farmers will reach an efficient amount of price and they will trade these rights with the railway company depending on how much they are willing to risk their crop and what is the worth of those rights according to farmers. This chaos theorem and property rights involve some of the problems, which is the transaction cost increases as the number of parties increase because the efforts to find out the other party and bargain a deal becomes more and more difficult, and organizations may have internal cost depending on their size and structure. So arbitrary initial assignment of rights matters psychologically and judicially, because if the initial case the government assigns rights to the railway company, it may reduce the morale of farmers and they start agitating against this. And the other problem is polluter and victim in some cases do not constitute the typical market. Next is the positive externality and corrective subsidy. So we can understand this through this graph. If there is a positive externality on the consumption side, so marginal private benefit will shift and marginal social benefit will be marginal private benefit and marginal external benefit. So this is the marginal external benefit, and there is no externality with the production side. So marginal social cost is equal to marginal private cost. In that case, government can give subsidy equal to the marginal external benefit. So individuals will demand more of that good and quantity will increase from QM to QS and we can achieve this welfare also. So thank you guys. See you in the next video. If there is any doubt and query, post it in the comment section below. Thank you guys.